Central Ohio monthly market update, October 2023. So this is the numbers for last month. Bottom line is we are down quite a lot. We have more supply than we have had in the last few months. Seasonality has kicked in a little, about to scale, but the result is a lot less houses sold, and the high interest rate is a big factor. And what was a weird market has gotten weirder.
But it's not just because of one dimension. It's not just because there's no supply. The supply is increasing, but the consumption is also going down. The September data definitely shows that we are entering the slower part of the year. This happens seasonally as we come out of summer, and we're down 15% month over month in terms of overall homes sold, down 18% year over year, which is consistent with pretty much where we've been all year, just because of the higher rates. But yeah, definitely seasonally, everything's slowing. We'll see that on the next couple of charts. Currently, we have just 1.25 months of supply on the market, though. So, we're not in a buyer's market at this point. The interesting thing is the list price versus sold price. You can see that the lines finally crossed over, meaning that the average sold price is below the average list price. That's the first time that's happened since summer began. And again, is a sign that things are slowing seasonally. But the interesting thing to note is that we're still up year over year. So $19,000 higher than this time last year, or a 5% increase. So continuing to add value to your home just through appreciation, even if things are tapering off for the year. The percent that are significantly above versus significantly below asking is changing. More are going below than are above, 5% off of asking. So that chart is starting to shift. And then, the other big one is days on market. The average and the mean both are going up. You can see that's going up from where they've been pretty steady most of the year. So that's, again, a sign of things slowing down. And then the last chart is sales that had a price reduction is up to 23%. And that's a pretty steady or significant rebound from the lows of 14-15% that we saw in the summer when things were really hot. So all this is largely attributed to the high mortgage rates. We hit 7.5% coming into this month, and I think a lot of that is starting to play out here. But a very, very big factor is just the seasonality. So there's no reason to expect that things are going to go up from here over the next couple of months. It's just a matter of how far down will they go.
Works. Yeah, that's great.
It's not a buyer's market, but the seller's market is less strong. Yep. And that means something, right?
Yep.
What do you think that means for people that are buying right now?
Well, so we're running into a situation where we have to double check every time to make sure we're not going to overpay for something. If there's not multiple offers, there's not necessarily a need to offer over asking now. If the house is hot enough, now you'll know from looking. The house is hot enough that's going to have lots of interest. You will end up with multiple offers. We're still seeing that play out. It's becoming more rare though. So we are running to a situation where if you can find houses that have been on the market for a month, you can actually offer under, and maybe have a shot at getting those. It's more, so that's gotten easier for buyers. The offer part. The harder part is it's 8%, It's a big difference.
Yeah. So we'll see. We'll come back and obviously pull it all again next month and report out, but it'll be interesting to see where it goes.
Yeah, for sure. Okay. Thanks again, Danny, for polling.
Yep. Always a pleasure.